Hi everybody, this is Martin here. We at iVSAChart would like to welcome you back to our annual Market Conference and Investment Outlook for 2018, featuring speakers with years of experience in their industry to share their opinions and insight in the market with you. So I hope to see you in our March 25th, 2018 workshop, and click below for more information. I'll see you there soon. Hi, welcome back. Kong Hee Fa Chai for those of you who are celebrating Chinese New Year. This is Martin Wong, founder of iVSAChart. I hope my video find you good and well and stay relaxed after the good holiday, or those of you who have really taken a lot of food, maybe it's time to get back to the gym and do a bit of. But let's not forget the market outlook for week ending 23rd of February 2018. Again, we have the disclosure. Everything we say here are more for educational purposes, so do take your due diligence in whatever investment that you do. Alright, definitely we want to look at the headlines which hover what we see in the US market and also locally in Malaysia. Definitely the global stock market, after what we've seen 2 weeks ago going through the major sell-off, it's back into the old high. It's still not back around 26.6k, which is the US Dow Jones, but definitely we are hitting, touching 25k, so that's really good. Even the KLCI is sort of improved and got back, which I'll show you next. But what's happening now is, despite what we see, the interest rate, the 10-year yield bond is aging closer to 3.0. In my earlier outlook, I did mention about what we talk about, the 3% interest rate, 3% for the treasury yield. Every time we hit that, we are seeing market correction. But this time, what is really happening is the market is pricing in the higher movement of the interest rate, which means when it hit 3.0, we may not get that kind of sell-off which we see. I'm going to show you the next slide, which actually tells you how much we have corrected and how much we should be able to move up higher beyond maybe the 26.6k for the Dow Jones and also our KLCI. Last high, if I'm not mistaken, is about 1875. We will, I'm sure, hit 1900 after the election, because a lot of things been said about the general election. Corrections has been around 10 to 12%. We have seen so what US Dow Jones hit low 23.5, now it's back to 24.9k, so that's very, very good. And we are seeing lots of recovery in the Singapore market, in the Indonesian market, our KLCI market, and also the Hong Kong exchange too. Alright, now let's touch back also on the Bitcoin. Continue to be very volatile. More news is coming out from the UK about more regulation. It did at one point hit 6,000 and then shot back up to 11k. Right now it's just back slightly below 10,000 for Bitcoin. So those of you investing in Bitcoin, I think you have found your bitter pill to swallow, isn't it? Right, now the Hong Kong, Singapore all continue to recover as it is, but good news is the SGX, the Singapore index, first appeared the green minor diamond on 21st of February, and that's very, very promising for this market here. If you see one for the Singapore market, the green minor diamond, then will be expecting another one coming out for the KLCI. Alright, now let's look at the chart which I've shown you last round about the 5 major corrections that we have since 2009 for the US Dow Jones. The most current one, which is about 2 weeks ago, just on the first 2 weeks of February, was the 11.7% correction, right? So we have the minus 19, minus 16, minus 12, minus 13, and right now 11.7. So within the range that we are talking about in here now, we don't see it going further than what it is. So a lot of these things been pricing into the market. Now this is a very good chart from CNBC, which I got hold of it. It's about the history of the interest rate and stock going back to 1941, right to now 2008. If you notice, in 1974 to 1982 we have a circular uptrend in terms of interest rate going up, and since 2000 and in 1982, which is the Ronald Reagan days as a president, we are seeing interest rate coming down, which is a circular downtrend. Now what I'm trying to show you in here, we have a 2 period of bearish movement that we see here. This is the this is the bearish period, and this is the downtrend, which in here. So we have really came out from a bearish cycle here, right? A bearish cycle for the S&P, right? So we're looking to gain higher. Now what's really interesting about, you can see we are in a region of interest rate moving up. We are in a period where we expect for the next 3 to 5 years, US interest rate is about to move up. So this is going to tail up, and we might just see a circular uptrend which follows the bull market. So what he's trying to say, in isolation, the interest rate rise that we see in US may give a positive rise in the stock market. So this is, again, looking back almost a 70 years history for those of you who like a little bit of history like me, seeing seasonality. And that's how we actually look at the market. We look at what have worked in the past, and then we're seeing it today. We don't go and invest based on hearsay and that say. We look at evidence, we look at facts. And here you are, it's a history of the interest rate rise against the US stocks. Very interesting, isn't it? Very interesting. So we have seen here, bearish market, bearish period. Now we're seeing an uptrend in here. Just take note of that one. All right, let's look at the US Dow Jones that we've seen here. Last week, definitely we have a red diamond in here. So this is nice. We're just looking for a green diamond here. Somewhere we want to see a green diamond coming up somewhere around here. Right. Same goes for the NASDAQ too. Now remember, if you go back to the NASDAQ, we were around the 26.6K, which I talked about earlier, and the market has since got back down to 23.5K, which is this point. Now we are looking for a bit more up movement. NASDAQ following the same thing. What do we want to see? We see a bit of upthrust. That's good. Supply are coming in, right? That means sellers are coming, but more importantly, we don't see the market sort of sell off, and that's very important. So we see a lot of supply, we see a lot of SOW sign of weakness in here, but we don't want to see this, sell off, because we already have the minus 11.7 correction here. All right. So next we have is the KLCI chart that we have here. Again, we have the red diamond, right, that we see here. This is the red diamond. So right now we don't see any minor diamond at all. Partly it's because the volume is diminishing, it's decreasing in here. But every time when you're searching volume, the minor diamond will be out soon. All right. Looking at the Straits Time, and which is very positive in here, this is the minor diamond, and that's why we see this nice surge in the volume. The volume came in, you can see volume going up, and that's why we have the green minor diamond. So remember, the minor green diamond that we see in iVSAchart always correlate back to price and volume. We need to see volume coming in. We look at the mid-cap stock again. This is mainly a lot of them are technology driven. You can see the red diamond that we have here. Right now, it's just going to move sideways a bit before it plays another recovery, like what we showed you, the interest rate and also the history of the stock market. All right, Hang Seng very similar to the Singapore market and also Malaysian market here. Definitely we are waiting for the minor diamond. All right, let's look at the top leader, loser and gainer for the KLSE and SGX. Definitely for start, for the first 1 week gainer is Innotech, up 16.6% from the minor diamond that we see in here. A very nice one hit here. This one in here we probably just sort of break even. If you do take partial profit, which we always talk about in our program, take somewhere between a 10% or more, then you're able to probably profit from this one here. Also look at the 1 week loser for the KLS. In this case, sorry, this should be a StarHub. Let me make an amendment here. This will be a SGX listed here. That's a minus 14% down as the market hits about $2.90. Right now about $2.50. So do take note of that one, SGX. On the KLSE, a better 1 week gainer was Inta Bena, a 15.3% gain since a minor diamond in here. Now remember, last week we have this sell-off that we see regionally, so that also affects and that gives us also a red diamond, why we have that one. The 1 week loser for the KLSE is Salutica, down 33.5% when we had this sell-off. The minor diamond you got in probably just sort of break even, a little small profit. All right, and you see this stage 4 downtrend. All right, so that's not good. Never buy in a stage 4 downtrend. Right now this looks very good, very promising in here. We got bullish volume. These are the things I want to show you. The little green hollow circles, those are bullish volume. Salutica in the shorter term is not going to go down, but likely to pitch up, and it's going to move up sooner. All right, that's all we have, and this is Martin Wong here signing off. And do visit our website and also our Facebooks on iVSAchart. iVSAChart.com. Check out our YouTube and Facebook. Thank you for watching.